Okay. Yesterday I gave you some questions to practice at home. Okay. So let's solve those questions first. Then we will discuss the other parts. Right? Okay. Pay attention. Was chapter number 6. How many illustrations I gave? Two illustrations, no? Two illustrations. Okay. Hmm. This 5 and 6 if I'm not wrong. Right? No? 5 and 6. 2. So let's start with the fifth one. Okay. The basic salary of Mr. A is 1 lakh rupees per month. He is entitled to the dearness allowance, which is 40% of basic salary. Okay. So DA he is going to get how much? 40,000 per month. 50% of the DA forms part of pay for retirement benefits. Okay. So whatever is the DA, out of that 50% is in terms. So out of this 20,000 per month is in terms, and the balance 20,000 not in terms, right? No, but salary is also taxable, DA in terms is also taxable, DA not in terms is also taxable. Okay. Both Mr. A and his employer ABC Limited contribute 15% of basic salary to the pension scheme referred under section 80 CCD. So both of them are contributing 15% of basic salary for NPS. Okay. Explain the tax treatment in respect of such contribution in the hands of Mr. A if he has exercised the option of shifting out, meaning that if he is not following 115 BSc, then what will be the tax treatment of these two contributions? And if he is following 115 BSc, what would be your answer if pays tax under default tax regime? And also we have to give the answer thinking that he is following 115 BSc, right? No? So what we are going to do here now, pay attention. Name of the associate is A, no? Okay. Mr. A's contribution is how much? 15% of basic. Now your basic is 1 lakh per month. So 15% of 1 lakh per month into 12 months. So 12 lakh will be the basic. Okay. And 15% of that will be 1 lakh 80. Correct. See, this 1 lakh 80,000 Mr. A is contributing. This is his own contribution. So we have two options. First option will claim deduction under section 80 CCD 1B to the extent of 50,000 will claim, and balance will claim under section CCD 1. Okay, no? Balance will claim under CCD 1. We always have to do this. Reverse don't do. Yesterday only we have seen one example. Okay. So CCD 1B, how much we will claim? Either this 1 lakh 80 or the limit which is given there, 50,000. 50,000 is the limit under CCD 1B, whichever is lower. So here we are going to get the deduction of 50,000. Okay. And under CCD 1, what we'll do, out of 180, we have already claimed 50 under CCD 1B, no? So that I will reduce. Whatever contribution I have claimed to the extent of 50 under CCD1B, I will reduce that. This will be allowed subject to 10% of salary. And for this salary, I would require basic plus DA in terms. So I will first calculate this salary. So basic will be 1 lakh into 12, which will be equal to 12 lakh, and DA in terms is how much? 20,000 per month. 20,000 into 12. This will be 2,40,000. So if we add both of them, we'll get 14,40,000. This is salary. So 14,40,000. So 10% of this will be 1,44,000. And the difference between both of them will be 1,30,000. 130 or 144, whichever is lower. So I'll get the deduction of 1,30,000. Can I say under CCD1B I am going to get 50, and under CCD1 I'll get 130. Right? This is the tax treatment which I am supposed to do. Okay, but his employer is also contributing the same amount, 15% of salary. So can I say this is employer's contribution to NPS account? That is also 15% of basic salary, which is equal to 15% of 12 lakhs, 1,80,000. Now see, there are two effects. From the point of view of employer also we will think, from the point of view of employee also we will think, right now? So tell me first, for employee, first effect will be taxable under the head income from salary, entire 1,80,000, and for this deduction under section 80 CCD 2 also he is going to get, right? So how much deduction he is going to get? Either 1,80,000 or 10% of 14,40,000. Salary will be same, no? Now once I have calculated the salary, that will remain same. Okay. So 1,80,000 or 14,44,000, this will be 144, no? 144. So how much will be the deduction under section CCD 1B? It will be 1,44,000. Did you get this? This is the deduction which is available under section 80 CCD 2, not 1B, CCD 2. Okay. And for employer, what will happen? Come on, tell me. For employer, he'll get deduction under section 36 subsection 1 clause 4A. 4A is there, no? And how much deduction he is going to get? Either the entire amount contributed or now do you remember one thing? There is an amendment here and this has been made 14%. Yes or no? So from this year onwards, don't take 10%, take 14% in the hands of employer. Okay, no? So 14% of 1 lakh, 14% of salary, 14 lakh 40,000 into 14% will be 2 lakh 1,600. So 2 lakh 1,600. This or this, whichever is lower. So 1 lakh 80,000 will be allowed fully in the hands of the employer. So this is the tax treatment which you are supposed to give in the hands of employer. And this is the tax treatment for what? For employer's contribution. For employee's contribution, the tax treatment is this. Done, no? Now pay attention. This entire thing you are doing if you are not following 115 BAC. And if you follow 115 BAC, no, then forget about any deduction under CCD 1B and 1. You will not get it. But as an employee, you are going to get deduction under CCD 2. But this will be up to 14%. Now this will not be 1 lakh 44. This will be 2 lakh 1,600 only. Okay. So if the assessee is following, if the employee is following 115 BAC, okay, then Mr. A's contribution, how much? 1,80,000. For this, deduction under section 80 CCD 1 and 1B will not be allowed. Okay. And employer's contribution 1,80,000. First it will be taxable under the head income from salary, and then deduction under section 80 CCD 2 is still available. So if you follow 115 BSc, still you are going to get this deduction. And now you are going to get more limit. Instead of 10%, now you are going to get 14% limit. Yes or no? So what will happen here? CCD 2, either the 1,80,000 or 10% of salary. The answer is no. Since you are following 115 BSc, now this 10% will become 14%. And which will be how much, guys? 2,01,600 only, which we have already calculated once. Yes or no? Either this or this, whichever is lower. So you are going to get 1,80,000 as deduction under section CCD 2. That's it. So this is what the question was saying. Okay, discuss the tax treatments. Got it, sir? Okay. Now let's come to the next question. Question number 6. The gross total income of Mr. X for the assessment year 25-26 is rupees 8 lakh. So this is the GTI which they have calculated. You should thank your examiner if he does all these cute things. You should tell him, thank you examiner that you have calculated GTI on your own and you have given it to us. If he is not going to calculate, no, he will give us the information, salary information, house property information, PGBP, and we'll have to first calculate those things. Apply clubbing set of provision, and we will have to calculate this 8 lakh. Then in that case, the question will be 15 mark question, big question, yes or no? Now if he is giving 8 lakh rupees, okay, GTI. Now he has made the following payments and investments. Contribution to PPF, tell me, will it be allowed under ATC? The answer is yes. Payment of tuition fees to APJ School, New Delhi for education of his son studying in class 11. This will also be allowed under ATC. Repayment of housing loan taken from Standard Chartered Bank. This will be ATC. Repayment of housing loan also. Contribution to approved fund for LIC. This will be ATCCC. Now you have two deductions. One under ATC and another under ATCCC. And one more is there. ATCCD 1 is also there. But you are not contributing to NPS. So that deduction will be nil. Okay. So can I say under section ATC you are going to get how much deduction? add all these figures, 1,10,000 plus 45,000 plus 25,000, you are going to get 1,80,000 or 1,50,000, whichever is lower. So can I say under 80C you are going to get the deduction of 1,50,000 only? 80CCC also you are having how much? 1,05,000, and for 80CCC also you are having a limit of 1,50,000, whichever is lower. So under 80CCC you are going to get 1,05,000 deduction. 80CCD subsection 1, no contribution, nil contribution. So this is not applicable only. Okay. So here your deduction is nil. So can you add all these three figures? You are going to get 1,50,000 plus 1,05,000 will give you 2,55,000. And there is one overall limit. Limit under section 80 CCE that is applicable on this total. And that limit is how much, friends? 1,50,000. So all these three deductions taken together cannot be more than 1,50,000. So how much will be your total deduction in this case? It will be 1,50,000. Please check. Done, sir? Presentation you know now. Very easy. Done. Now we'll move ahead. Now what we are going to do? We are going to do 80CCH. Okay. Pay attention. There is one Agniveer scheme which the central government has launched few years back, 5 years back. This scheme was launched. Agniveer scheme. See, this is for, getting into Army, Navy, Air Force. Earlier what used to happen, that if you give one written exam, appear for medical fitness test, etc., you pass, you get selected, and now you become a soldier, permanent employee. Right? No? So once you become a permanent soldier, permanent employee, now you are the headache of the government. The government will have to pay you what? Government will have to feed you, government will have to train you, government will have to give you salary, government will have to give you benefits, many things. Now you are a permanent headache for the government till the time you don't retire from the services. Why? Because you are getting the permanent employment as a soldier. Now what happens now? In big countries, if you see, like developed countries, UK, USA, Germany, Canada, all these countries, there the selection process of their soldiers is a bit different as compared to what we had. Okay. What we do? We conduct a written exam, we conduct the physical test, and if the candidate qualifies that both the exams, he gets selected for the job as a soldier. Either he'll be getting into Army, Navy or Air Force. Yes or no? Permanent employment. Now this scheme was launched. Under this scheme, all the youth whose age is 17 and a half or more. So your age should be 17 and a half years or more. You can now get into the armed forces through this scheme only. The earlier direct entry which used to happen as a soldier, now that entry is stopped. Now if you want to become a soldier, first you'll have to come under this scheme, Agniveer scheme. Under this scheme what happens? First you write your exam, written. Then medical will be done. Earlier also it used to happen, now it happens. Now once you qualify to become a soldier, you will not become the permanent soldier, permanent employee of the government. No. You will first come under this scheme, Agniveer scheme. You will be here for 4 years. 4 years under this scheme. You will be considered as a probationary soldier. Meaning, not a permanent soldier but a probationary soldier. You are not under the permanent employment. Permanent employment will offer you after 4 years if you are fit to be a permanent soldier. So there will be many criteria on the basis of which you will be tested. Okay, how is your performance in the exams? How are you doing in your trainings, etc. So out of all the agniveers which are there, all the agniveers will not get into the permanent employment. They will not become the permanent soldiers. Only majority 20 to 25% will become the permanent soldiers. Rest will go out. Now tata bye bye. But still this is a beneficial scheme for the youth. See, earlier youth were directly getting into the permanent employment as a soldier, but now they are supposed to get through this scheme also. So now there are three barriers. Number one, written exam. Number two, physical test. And number three, Agniveer scheme. Under this scheme, what will happen? You will come as a very young person, untrained, unprofessional, don't know anything, yes or no. Once you will be brought under the scheme, you will be doing those same things which a soldier does. You will be taught also. You will be given the training, you will be taught also, and few tests will be taken. Your training performance and everything will be tested, and after 4 years, out of all the Agniveers, 25% will become fit to become the permanent soldiers. Rest all of you know, if you are not becoming the permanent soldiers, now for you, your soldier journey comes to an end here. You cannot become a permanent soldier now. But 4 years, after 4 years, no, if you compare yourself with that student who did not come in the scheme, still you are at a benefit only. Because 4 years you would have spent outside in any college, running behind girls, doing this time pass, doing that time pass, okay. And your personality would also not have, developed. You would not have been in a discipline. So in 4 years, you will be taught everything which a soldier learns. So just imagine the kind of personality which you will be having after coming out of this scheme. Even if you are not joining as a soldier, but still you will be, comparatively, you will be 100 times better as compared to the normal youth who has wasted his 4 years. But you have invested your 4 years here in this scheme. In this scheme, you will be taught the combat skills, artillery, how to how to use the weapons, the physical training, the discipline, plus you will be taught also, you will get a graduation degree also within these 4 years. So once you will be coming out of this scheme, no, you will be a complete package. A 22 years old young man who is disciplined, who is having all the qualities which a gentleman should have, okay, and you come out of this scheme now. And when you will come out now under the Agniveer scheme, the moment you join now, you become the employee of the government. The moment you join, you become the employee of the government, but not the permanent one, temporary one for 4 years. Now after 4 years, we will decide that whether to keep you permanent or not. But 4 years, for the first 4 years also, you are the employee. So during your training period also, you are going to get money. Because you will be working as a soldier. You will be doing all those activities which a soldier does, along with training, this, that, studies, everything. Yes or no? Now just imagine these 4 years, others are not earning. You are earning also. And while you are earning, no, whatever salary the government will offer will be your taxable income under the head salary. But out of that salary, 30% amount will be deducted. And there will be a fund which will be created for Agniveers. That fund is Agniveer Corpus Fund. Which fund? Agniveer Corpus Fund. Now from your salary, every month 30% amount will be deducted and it will go to Agniveer Corpus Fund. So who is this? this fellow is known as Agniveer. This fellow is known as Agniveer. So he is the employee only, but not a permanent employee, temporary employee of the central government, who wished to join the armed forces on a permanent basis. But before joining permanent, you are supposed to be in this scheme for the first 4 years. So for the first 4 years, you are an employee only of the government. You are going to get the salary, etc. All the benefits you are going to get. But out of your salary for the first 4 years, every month, 30% amount will be deducted, and in this corpus fund it will go. Employer means the central government, who is your employer. That central government will also contribute here. And the amount invested here, no, on that amount, standing to the credit of Agniveer Corpus Fund account. ACF means Agniveer Corpus Fund account. Yes or no? So whatever amount which is standing to your credit as a balance in your account, on that amount, interest will be credited at a certain rate on a permanent basis in your account. So in your account, three amounts will come. Don't you think this type of same thing happens in the Provident Fund also? Just like Provident Fund, this is your Agniveer Corpus Fund. So every year, you will also contribute, your employer will also contribute, on a periodic basis, interest will come out. Now this will happen for 4 years. How many years? 4 years. Till the time you are Agniveer. If you qualify to become a permanent soldier, so this fund will now be transferred to your Provident Fund now. This amount will be transferred to your Provident Fund. Yes or no? But if you don't qualify to become a permanent soldier, now you are supposed to leave. Okay? 4 years are over. You are no more an Agniveer. You have qualified everything. Now you are supposed to leave. So at the time of leaving, from this corpus fund account, from this corpus fund account, a lump sum will be given. Lump sum amount on leaving. So when you leave from the scheme, when you will come out as an Agniveer, that lump sum will be given to you. You won't believe how much this amount will be. It will be nearly 11.5 to 12 lakh rupees. In 4 years, you have saved this much. You are earning also, getting into discipline also, becoming a gentleman also. And look at those people who have not come in this scheme. Normal youth, what they are doing. In 4 years, will they earn anything? No, you are earning. After 4 years, will they have any corpus accumulated amount in their hands? No. When you leave, you will have 11.5 to 12 lakh rupees in your hands. Plus, will they be living a disciplined life? Do they have that combat skills? Do they have that skills which the soldier has? No, you have all of them. In all the terms, you are superior as compared to them. So this scheme was brought with a very, broad sense of mind. But people were against this scheme also at that time. When the scheme was brought at that time, what happened? Many people got on the roads. The institutes who are preparing the students for these exams, those institutes, their students, they came on the roads, they started protesting and all. So many things happened. This thing happened at COVID time. During that time, COVID was there. Okay, but now everything is settled. The scheme is still on. Okay, So whether you want or not, you have to become a soldier, you have to become a soldier like this. Earlier you used to have two hurdles, now this is the third hurdle which you have to cross. Okay, this is known as Agni Pariksha, which you are supposed to give under the Agnipath scheme or Agniveer scheme. Yes or no? So become an Agniveer, give the Agni Pariksha. And if you pass in the Agni Pariksha, we are, with both the arms open, we are welcoming you to become a soldier. Otherwise, don't become a soldier. You are not fit. Right? So, we are supposed to discuss the tax treatment of these amounts. See, whenever your contribution will happen, no? This is own contribution. Own contribution to own Agniveer Corpus Fund account. This is own contribution. Central government is contributing. This is employer's contribution. This interest is also getting credited. Yes or no? And this lump sum is also coming. Whenever this lump sum will come, this lump sum is also fully exempt. Okay. Interest credited, that will also be fully exempt. But wait. If you contribute out of your salary only, no? So if your entire salary gets taxed, means this amount is already considered as your salary. No need to do anything else. But for your own contribution, you are going to get deduction under section 80CCH subsection 1. Full amount. So first, out of your salary, whatever amount goes in your Agniveer Corpus Fund account, that entire amount is allowed as a deduction under section 80CCH1. Done? Now, whatever amount the employer also contributes, that amount, two effects to be given. First, taxable as income from salary. So as per section 17 subsection 1, do you know the definition of salary which I told you? So the term salary is defined, 17 subsection 1. So in 17.1, salary is defined. Salary includes 1, 2, 3, 4, 5. Last thing is this. This I have not taught you under the salary head. I was waiting for this time. So the term salary includes, as per 17.1, many things, no? Like wages, annuity pension, gratuity, fees, commission, perquisite, profit in lieu of salary, advance salary, then leave salary, then contribution to PF, RPF account over and above 12%, contribution to, interest credited to RPF account over and above 9.5%, then transferred balances from UPF to RPF in excess of 12%, in excess of 9.5%. Last amount is this. Any contribution made by, even the contribution to NPS is your taxable salary. And the last amount is this. Contribution made by the employer, central government, in the Agniveer Corpus Fund is the salary of this Agniveer. Taxable under the head salary, full amount. But see, if this amount is your salary, tell me, is this amount already contributed in Corpus Fund? The amount which is contributed in the Corpus Fund is treated as your salary. Your salary, is this amount contributed? Yes. So for that you are going to get another deduction. Just like for employer's contribution in NPS, you are getting 80CCD2. So for your employer's contribution in Agniveer Corpus Fund, you are going to get 80CCH subsection 2. How much? Fully allowed, full amount. Full amount will be allowed as a deduction. No limit. Whatever amount the employer has given, first taxable under the head salary, and then later on it will be fully allowed as a deduction under 80CCH 2. Now see, if you follow 115 BSE, do you get 80CCD 2? Do you get the deduction of 80CCD 2? Yes. So in the same manner, if you are following 115 BSc, then you are going to get the deduction for 80CCH2 also. So 80CCD2 also you will get. The deduction under section 80CCH subsection 2 also you will get. But don't ask for deduction under CCH1. Just like the way you cannot ask for CCD1 and 1B. Hello, 80CCH1 cannot be asked. If you were asking CCD2, then ask for CCH2 also. Got it, sir? This was the tax treatment of Agniveer Corpus Fund. I hope you will remember this. And if they want to make your paper difficult, no, trust me on this. These are the things which are very easy things. But students, ignore all these things and go in the exams. If you do it only once also properly, no, with understanding, you will remember it. Remember it. If the paper is tough, these things are asked. For others, it will be difficult. For you, it will be easy. Okay, remember these tax effects. So the C series is over now. All the deductions which are given in C series like 80C, 80CCC, 80CCD, 80CCH, all the deduction along with the overall limit of 80CCE, we have completed all the sections of 80C series. Okay, now we are going to go for D, 80D. Pay attention now. The deduction for 80D will be available to individual or HUF. Now this individual can be resident also, can be non-resident also, no problem. HUF can be resident also, can be non-resident also, no problem. The assessee can be resident non-resident individual or resident non-resident HUF. So for 80D, this is the assessee. Okay. Now assessee will incur 4 expenses, 4 expenditures. 1, 2, 3, 4. In 80C there were 18 payments, 18 investments, yes or no? But in 80D only 4 payments we have given. Okay. And those payments you are supposed to make for self, spouse, dependent children, meaning you and your family, or any of your parents. And if you are HUF, you are supposed to make such payments for your members. So if you are individual, the payments which I am going to write, you are going to make those payments for self, spouse, dependent children, mark dependent children, and parents. Parents may or may not be dependent on you, no problem in that. Okay. But the parents should be your parents, not your spouse's parents. They are not your parents. They are your parents-in-law. Yes or no? Mother-in-law, father-in-law. We are not talking about mother-in-law, father-in-law. We are talking about mother-father. Your mother-father. Okay. Now, what type of expenses will be made? Assessee incurs the expenditure or payment. What payment he will make? Number 1, MIP. Number 2, CGHS. Number 3, PHC. Number 4, medical expenses on any senior citizen for whom medical insurance policy is not there. No medical insurance premium is paid. So such senior citizen for whom medical insurance premium is not paid. MIP means medical insurance premium. CGHS means Central Government Health Scheme. PHC means preventive health checkup. And medical expense of any senior citizen for whom there is no mediclaim. Yes or no? Now, For yourself, for your spouse, for your dependent children, pay the medical insurance premium. That premium will qualify for deduction under section 80D. So whatever premium you have paid for yourself, your spouse and your dependent children, that premium will qualify for deduction under 80D. Even if you pay the premium, medical insurance premium for your parents, that will also qualify. And if you are HUF and you are making the payment for any of your member, then that payment will also qualify. Member may or may not be relative, may or may not be dependent on you. But if you are an individual making contribution or payment to central government health scheme for yourself, your spouse and dependent children, then it will be allowed as a deduction under 80D, full stop. Meaning that they want to give this deduction only if the payment is made for yourself, your spouse and dependent children only. Meaning that again, CGHS payment made for parents will not qualify for deduction under 80D. CGHS payment made by HUF for its member will not qualify for 80D. So CGHS payment will not qualify. But if it is made for self, spouse, dependent children, then in the central government health scheme, whatever you are contributing will be allowed as a deduction under 80D. Will become eligible. Now for preventive health checkup, we do those blood test, thyroid test, these tests, different types of pathology test and all we do. No, those are what? Preventive health checkup. We go to doctor for regular checkups. So any preventive health checkup, payment for that, for yourself, spouse and dependent children and for your parents will qualify for deduction under 80D. Full stop. But if HUF is making such payment for members, it will not qualify because 80D does not specify that. If medical expenditure is incurred for any senior citizen, see, self, spouse, dependent children is a senior citizen, no mediclaim is taken. Parents, senior citizen, no mediclaim is taken. Yes or no? Then in the case of HUF, senior citizen, member is HUF, member of the HUF, member is senior citizen, no mediclaim is paid. So if any of them is what? A senior citizen, and for them any medical insurance premium is not paid, so for them whatever medical expenditures are incurred, that medical expenditure will also qualify. Now all these amounts must be paid by way of any mode other than cash. Any mode other than cash. OCOC means other than cash. But amount of preventive health checkup can be paid by way of any mode including cash. So amount paid in cash for preventive health checkup will qualify or will not qualify? Will qualify. But all the other amounts will qualify only if they are paid by way of prescribed modes. Forget about prescribed modes. Other than cash, any mode will do. Yes or no? Other than cash, any mode will do. But cash should not be paid. Medical insurance premium paid in any mode other than cash. Central government health scheme, payment is made in any mode other than cash. Medical expense for any senior citizen for whom no mediclaim policy was taken, then this medical expense also paid by way of any mode other than cash. But preventive health checkup amount you can pay in any mode, in cash, other than cash, any mode will qualify. But remember, the total amount of preventive health checkup for both you and your family, you and your family along with your parents, this total amount cannot be more than 5,000. So if preventive health checkup payment made for yourself, your spouse and dependent children is 4,000, and for your parents also you have paid 3,000, So 4 plus 3, both you cannot qualify. Then it will become 7. So total should not be more than 5. So if for you and your family you are paying 4 and you are qualifying that 4,000, then for your parents 3,000 will not qualify, only 1,000 will qualify. So that 4 plus 1 becomes 5. Or for example, you can qualify for your parents 3,000, you can qualify fully. Then for you and your family 4,000 will not qualify, only 2,000 will qualify. Or for you, you can qualify how much? For you, you can qualify 2,500, and for your parents also you can qualify 2,500. Out of 4, 2,500, out of 3, 2,500. In whatever proportion you want to qualify, you can qualify. There is no restriction. But the total qualifying amount of preventive health checkup cannot be more than 5,000. Done? Now, what you are supposed to do? See, individual making these 4 payments for self, spouse and dependent children. Total. This is the total eligible amount under 80D. Either this total amount or 25,000, whichever is lower, will be allowed as a deduction. Wait. See, look at here. Parents. This is the total eligible amount under 80D. Will be allowed under 80D, subject to maximum additional limit of 25,000. So for parents, a separate 25,000 limit is given. For you and your family, separate 25,000 limit is given. And for HUF, this is the qualifying amount. Hello? This will be allowed in the hands of HUF, subject to maximum 25,000 limit given to HUF. Done, sir? So can I say this amount is known as total qualifying amount under section 80D. This will be allowed subject to maximum limit given under section 80D. How much maximum limit? 25,000. Each for you and your family and parents separately. And for HUF, 25,000. Yes or no? Now pay attention. Please look at this very carefully. Self, spouse, dependent child, senior citizen, any of them senior citizen, and for them medical insurance policy is paid and this amount gets qualified. So in your total qualifying amount, are you qualifying any medical insurance premium for a senior citizen? Yes. Then this 25,000 limit will become double, 50,000. So if the total amount which gets qualified, can I say this amount? This is the amount, total amount. If this amount will be allowed subject to 25, yes or no? But if in this total qualifying amount, medical insurance premium of a senior citizen is there, then the limit will be 25. Or in this total amount, if this medical expense is included, which was for a senior citizen for whom no mediclaim was given, then also the limit will become 50,000. Mediclaim for senior citizen paid, limit will be taken as 50,000. Medical expense of a senior citizen paid, hello sir, that senior citizen for whom there is no mediclaim, for that senior citizen if the medical expenditure is incurred, yes or no, that also will qualify subject to maximum 50,000. that also will be allowed subject to maximum 50,000. So this limit of 25 will be taken as 50. Taken as 50. When it will be taken as 50? Come on, tell me. If the medical insurance premium for a senior citizen is paid during the previous year, or medical expenses of senior citizen for whom there is no mediclaim is paid during the previous year. Then for this previous year, the limit available will not be 25, the limit available will be 50,000. Will you remember this? Sure. Done. ATD, this much is there. But 2-3 important points which I would like to discuss before that. This entire thing I have just now explained. Now pay attention. How much will be the deduction? 25,000 will be the maximum amount of deduction. But sometimes this 25 will be taken as 50,000. Okay. And what is the case where the limit will be 50,000? If the mediclaim of a senior citizen is paid, then you will take 50,000 limit. If the medical expense of a senior citizen is paid, for whom there was no mediclaim policy, yes or no? For that senior citizen, if the medical expense is incurred, then also take the limit of 50,000. Done, sir? Now pay attention. Whatever payments you are making, no, if you want these payments should be allowed as a deduction under ATD, these payments must be out of your taxable income. These payments must be out of your taxable income. Just like 80CCC. 80CCC, payment to notified pension fund should be always out of your taxable income. Yes or no? So if these payments you want to claim under ATD, these payments must be out of your taxable income. Okay? This is one important thing. Second thing which I would like to tell you is, if employer is there paying medical insurance premium to the insurance company, and this premium is on medical insurance policy of the assessee who is the employee of this employer. Yes or no? So assessee, your employer is paying your medical insurance premium, or assessees, meaning employees, spouse, children, dependent, brother, sister, parents. For any of these persons, employer has paid premium, medical insurance premium, then number one, it is fully exempt perquisite for assessee. Is this amount taxed as your salary? Is this amount taxed as your salary or it is getting exempt? This amount is getting exempt, no? The amount of premium which the employer is paying, is this amount getting taxed in your hands as your salary? No, this is getting fully exempt. So whatever premium your employer will pay, not becoming your taxable income, how can you claim that as a deduction under 80D? Because 80D says that this premium should go out of your taxable income and the amount is not getting taxed in your hands. So definitely for this you are not going to get any deduction under 80D. Yes or no? So fully exempt, and for this deduction under section 80D cannot be taken. Done, sir? Sure, sir? See, for yourself, your spouse and your dependent children, if it is paid by the employer, then it is not getting taxable in your hands. So you cannot claim it as you cannot claim it as deduction under 80D, because the premium paid by employer is your exempt perquisite, not getting taxable in your hands as your income. If that premium would have got taxable in your hands, then it is your taxable income paid as premium, yes or no? Then it would have been allowed as a deduction under 80D. But the amount of premium paid by the employer not becoming your taxable income, so this is your exempt income paid in the form of what? Premium. How can we allow? We want your premium to be paid out of your taxable income, not exempt income. Yes or no? Now, can your employer pay for your independent children? Independent children? Yes. So independent children are also covered here. Still that is exempt. And even if it was not exempt, no, you were not able to claim the deduction under 80D, because under 80D, premium for dependent children is allowed. Premium for dependent brother, dependent sister, dependent parents paid by employer, even if it was allowed as a deduction, even if it was taxable as a perquisite, still it was not allowed. If it was for brother or sister, it would have been allowed if it would have been for parents. Then it would have been allowed because the premium was taxed. So first of all, don't get into so much details. Just remember, if the employer is paying the premium for these persons, not a taxable perquisite for you, so their premium, their mediclaim premium, you cannot claim as a deduction. This medical insurance premium you cannot claim as a deduction under 80D. But is it possible that employer is paying medical insurance policy premium, copy and paste on the policy of independent parents? See, for dependent parents, if you will pay, then it is not a exempt perquisite for you. But for dependent parents, if the employer will pay, then first effect, it is your taxable perquisite under the head income from salary. And now since the amount is already taxed as your income and that amount is your medical insurance premium only, so claim it under 80D. Under 80D, this will be allowed. This will be allowed under 80D. So for this, you are going to get deduction under section 80D. Two effects will be given. Okay. Now pay attention. I have changed the color only. Huh? Now pay attention. See. Can I say now the employer pays medical insurance premium to insure on medical insurance premium to medical insurance on medical insurance policy for any other family member or relative of the employee. This is your point number C. This is your point number B. This is your point number A. So in the point A, point B, forget about these 2 points. Any other relative, any other family members, then what will be the effect, guys? It will be a fully taxable perquisite for you. Hello, sir. It will be a fully taxable perquisite for you, and you are not going to get any deduction also under 80D, sir. Why? Because even if you would have paid for those relatives, you would not have got any deduction. Got it, sir? Should I move ahead? So this was 80D. Do you remember that single premium policy? Single premium policy. So is it possible? Single premium on mediclaim policy, which was taken for 4 years on 1st of November 2024. So the policy was taken on 1st November 2024 for how many years? 4 years. So every year paying the premium? No. For entire 4 years period, you are paying a single premium. So do one thing. This single premium has to be spread over the previous years covered by policy term. So what is the policy term? 4 years. So single premium divided by 4 years. No! You have to see these 4 years are spread in how many previous years? Yes. So if the policy is taken on 1st April to 1st November 2024, meaning 24-25. And this for 4 years, if the premium is paid, next premium you will have to pay on 1st of November 2028. 24 to 25, 26, 27, 28. So 4 years. 1st of November 2028. The next premium now you will pay on 1st November 28. 31st October 28. Till that day, these 4 years are there. And for these 4 years, till 31st October 2028, this single premium was paid. Now can I say these 4 years term is getting spread into how many years? How many previous years? Count the previous years now. 5 previous years. Yes. So spread over the previous years covered by policy term. So 4 years term covered by, come on, tell me, how many previous years? 5 previous years. So single premium divided by 5 previous years. Done, sir? Hmm? 80D done. 80D done. Let's come to questions. See the single premium which I was saying, no? This is single premium. Just now I said no. This is what is they have written. And they have tried to make it as complicated as they can. and I have made as simple as I can. Okay, now this is your question on Mediclaim. Question number 7. Mr. A, 40 years, paid medical insurance premium of 20,000 during 24-25 to ensure his health as well as health of his spouse. Okay. So 20,000 is for self and spouse. Also paid premium of 47,000 of his father, 63 years. So father is a senior citizen. For him 47 is paid. So 47 is paid for parents. Very good. He contributed 3,600 to CGHS. So if nothing is mentioned, it would have been contributed for himself only. Incurred 3,000 in cash on preventive health checkup of himself and spouse. Okay, 3,000 in cash, but it was for preventive health checkup, then it is okay, no problem. And 4,000 by check on the preventive health checkup of his father. So this was for father. 3 plus 4, 7, cannot be more than 5. Do you remember? Okay. So compute the deduction. See what I'll do? I'll write down something over here. Okay. Self, spouse, dependent children, and this is parents. May or may not be dependent. Now the parents are senior citizen given in the question. Medical insurance premium 20,000 is given. For parents 47,000 was given, no? 47,000. CGHS payment also made. For self it is 3,600. Anything for the parents? No, nothing. And preventive health checkup. Here it is 3 and here it is 4. First I will write entire 3, first I will write entire 4. Now I will check. See, if I qualify this 3, then also I have already exceeded 25. And if I qualify this 4, then also it will be more than what? 50,000. But in total I don't have to do it more than 5,000. So if I qualify 3,000 over here, can I do it? Yes. So I can qualify this 3. No, I can qualify 2. Then 3 plus 2. See, qualifying 4,000 over there will be of no use. Even if I qualify entire 4, I am going to get total 50. So what I'll do here, see, I will write down 3 and 4 like this only. I will do a total. Okay. And that total should not be more than, this is the qualifying amount. Qualifying amount, which will be 26,600. Okay. And this is 51,000. Sure. Now my total limit here is 25 and total limit here is 50. See, anyways, I have to make sure that it does not exceed 50. And I have to make sure that this does not exceed 25. So I have to keep both the amounts 25 and 50. So this will be 50 if this 4,000 is not qualified. How much is qualified? 3,000. And this will become 25 if I qualify how much? Only 1400 from here. So 3000 plus 1400, 4400. Even if I qualify 2000 here, no, what will happen? The total will become 25,600. Ultimately, I am going to get 25 only. Okay, but this is no, in examination, this kind of things become very difficult, very complicated. So what we always do, what I usually follow, this is what the institute has followed in the solution, if you will see. What I usually follow, first of all, I see that where is the before the qualifying amount, where there is more amount required, where there is more amount required. See, if this 20 plus 3, it is already 23,600. So I will qualify less over here. Yes, qualifying less here will be better. Because if I qualify more, anyways, what will happen? That is going to cross 25,000 and the maximum amount will get washed out. See, if I qualify 3 here, so here only 2000 will qualify. So 47 plus 2 will become 49. I will get only 49,000 deduction. Getting my point? So I will try to qualify more amount this side towards 47. Yes or no? So I will qualify this entire 4. No. I will qualify 3000 from here. So that this becomes 50. Or if I can qualify entire 4 also, then also there is no problem. Why? Then also there is no problem. Why? See, if I qualify the entire 4, then from here, how much it will qualify? 1000. So 20, this will be how much? 23 and 1. It will be 23 and 1, 24,600. Now there will be a loss over here. Getting my point? What I am trying to do. So I have to balance both these amount in such a way that the total should not be more than 50 and I get the entire benefit also. Yes or no? So I try to make it how much? I'll try to make it 1400 over here so that this exactly becomes 25, and I'll try to make this how much? 1400 from here. So balance 3600 from here also. 3600, 1400. Total will be, here it will be 25. 25. Here it will be 50,600, but will qualify to the extent of 50. So both I will get fully. Getting my point? So this will be 25,000 and this will be how much? 50,600. This or this whichever is lower, this or this whichever is lower, I am going to get 25,000 from here and I am going to get 50,000 from here. See, make this combination in whatever whatever amount you want, but make sure both the total are not more than 5,000 and maximum amount you should get as a deduction. You should not be losing anything. Yes or no? So this will be your 75,000 deduction under 80D. So this was your one deduction 80D, which is complete now. Now there is one small simple thing which I would like to ask you. See, for myself, my spouse and my dependent children and for my parents, I am paying medical insurance premium 32,000 here, and for parents I am paying only 20,000, and my parents are not senior citizen. Let us say my parents are not senior citizen. Okay, I am paying CGHS amounting to 2,000. For parents I am paying 2,000, but will be of no use because it is not going to qualify. Okay, preventive health checkup I am paying 1,000 over here and 1,000 over here. So anyways, both will qualify. Okay, now let's see, this is 21,000 and this is already 35,000. Now none of us is a senior citizen, so 25,000 limit will be available here also and 25,000 limit will be available here also. Whichever is lower, this will be 21 and this will be 25. So my deduction will be total 46,000. I am calculating my deduction in this way, then it is correct. But many smart people, what they will do, I'll tell you what they will do. Many people are very smart, you know what they will do. Sir, if we have to add both of them, no. Why don't we add both of them? This plus this, 52. This to this to total is, sir, 56. There is a limit of 50, no, sir. There is a limit of 50, no. Whichever is lower. 25, 25, 50. Everything merged. Now what is happening here, you know? Parents limit is 4,000 unutilized. See, if you total it, no, so the amount which was not getting allowed for you, to the extent of 4,000, it will be allowed with the limit of parents. That the government is not going to allow you. They are saying for you it is separately 25,000 and for your parents it is separately 25. Calculate the amount separately. If some limit, you know, remains from your parents, let it be. Or some limit remains in you, let it be. You cannot utilize your limit for your parents or your parents' limit for you. So if you combine both of them, what will happen? There is a possibility that you can utilize the unutilized limit of others, parents, for yourself, or unutilized limit of yours for parents. Possible, no? So that should not happen. Hence calculate the exemption separately. Doing this will be wrong. You cannot do it. Calculate separately. So your exemption deduction will be 46. Done? Now this was your ATD. Now guys, who is a senior citizen, you know? Who is senior citizen? 60 years or more? No. Resident individual. If you are 500 years old, but you are a non-resident, we will not consider you senior citizen. Getting my point? So even before you check the age is just a number. Even before you check the age, check the residential status. If residential status is resident and the age is 60 or more, then it is a senior citizen. Understanding? So this is the definition of senior citizen, which I have already told you earlier also in my first lecture when I was telling you the tax rates, and this is written here also. Please pay attention on this. You should not commit mistake for this. Okay. Now next one, ATDD. Very easy section. Very easy. See. Assessee must be an individual or HUF. But this assessee must be a resident. This is the first section where they are saying that in order to claim this deduction under section 80DD, the deduction which you want to claim under 80DD, only this individual can claim. Individual and HUF, but only if the assessee is a resident. Resident assessee can claim this deduction. Okay. So what he has to do? He has to incur expenditure on HDR. Now what type of expenditure he will incur? He will incur the expenditure on medical treatment, including training, nursing, rehabilitation, etc. of this HDR. HDR full form is handicap dependent relative. The person on whom I am spending the money, the person for whom I am spending the money, that person is a handicap, dependent on me and my relative also. HDR. That person, for the medical treatment of that person, I am spending money, including his training, his rehabilitation expense, his nursing expense, all the expenses I am incurring. So his medical treatment expense I am incurring, including training, rehabilitation and nursing expenses. Yes or no? And expenditure in the nature of deposit in special schemes. Now the schemes can be of LIC, it can be of UTI or other approved institutions. There are some special schemes. Okay. So for the benefit of my HDR, I am depositing that money in that scheme on the name of my HDR. That okay, I have taken his insurance. I am investing in insurance schemes for him. I am investing in some annuity schemes for him. There are special schemes for handicaps. Why I am investing in those schemes? Because God forbid if something happens to me, at least I am investing in these schemes from which he'll start getting money if I don't stay alive. Yes or no? So if I don't stay alive, that HDR will start getting the money. At least his future will be safe. Financially he will not have to bother. Getting my point? With that money he can keep someone to take care of himself. Now what happens that if this assessee who is a resident has incurred some expenditure on the medical treatment of the HDR, or he has deposited in special schemes of LIC, UTI or other approved insurance company for this HDR, then this individual or HUF becomes eligible to claim deduction under ATD. This is the eligibility criteria. Okay, how much deduction will be given, that I am telling you. But this is the criteria on the basis of which you become eligible to claim deduction under ATDD. First, you are individual HUF, but you must be a resident. Second, you must incur expenditure of this type for your HDR. Now, who is HDR? HDR is your relative. Relative means what type of relative? In the case of individual SSPC. In the case of HUF, M. S for spouse. Another S for siblings, brother, sister. I cannot write S, B, S, P, C instead of SSPC. S, spouse, individual spouse, individual's siblings, brother, sister, individual's parents, individual's children, or if the assessee is HUF, any member of the HUF. So these are the relatives who must be dependent on the assessees. Dependent means their survival and maintenance. Eating, sleeping, bathing, everything is taken care of by this particular assessee. If assessee is there or not there, it will affect their survival. Their survival will be difficult if assessee is not there. Their survival is easier. They are surviving because the assessee is there. So they are dependent on their survival, their maintenance on the assessee. But they are handicapped. Handicap means what? Any physical or any mental disability. So these relatives are suffering from any physical or mental disability which is specified in Rule 11D. So there is one rule, Rule 11D. In that rule, whatever disabilities, physical and mental disabilities are, specified. So your relative who is dependent on you, he is suffering with these disabilities. Then he will be treated as handicapped. So if there is a relative, any of these, who is dependent on you and suffering from these disabilities, on this type of HDR, you are incurring expenditures. Either this or this. You are eligible to get deduction under 80D. How much? The amount spent by you. No, ignore that amount. The amount actually spent by you, that amount is not going to be allowed. It can be any amount which you can spend. No, we don't want to give you the deduction of the amount spent. Flat 75,000 or 1,25,000 flat. 75,000 will allow if disability is greater than or equal to 40% but less than 80%. And if the disability is more than 80%, more than or equal to 80%, then flat 1,25,000. So the amount of deduction does not depend on the amount spent. Hence, ignore the amount spent. See, to get the deduction, you will have to spend the amount. But how much you are spending, based on that, you are not going to get the deduction. You are going to get the deduction based on the disability percentage of your HDR. So if your HDR is disabled and his disability is 40% or more but less than 80%, then he is ordinarily disabled. You will get a flat deduction of 75,000. And if your HDR is suffering from disability and the disability percentage is 80% or more, 80% or more, then your HDR is severely disabled. We are going to give you 1,25,000 flat, irrespective of the amount, how much you have spent. Can you spend less? Yes, but still you are getting this flat amount. So now if you will spend more, no, don't come asking for more deduction. You are still going to get this much amount only. So ignore the amount spent. Spending is necessary to get the deduction, but how much you are spending, based on that you are not going to get the deduction. You are going to get the deduction based on the disability percentage. So what is the disability percentage? 40% or more, less than 80%, ordinarily disabled, you are going to get 75. 80% or more, then severely disabled, you are going to get flat 1,25,000. Now who will decide that how much he is disabled? You will decide. You will say he is disabled 100%. Yes or no? So that you can claim full amount 125. So you will have to take your HDR to approved medical authorities. To approved medical authorities. Get his medical checkup done from there. So that approved medical authority, they will issue a certificate, disability certificate. In that certificate, the name of the HDR will be mentioned. This is the name of the person, HDR. Your name will be written, that you have brought this person over here. Your relationship with this HDR. What type of disability he is suffering from. That disability, description of that disability will be given. And is it a specified disability as per Rule 11D? It will be given there. Okay. Now, how much disability is there? So he will be checked properly, and based on the checkup, the percentage will be specified in that certificate. So before claiming this deduction, you are supposed to show us the certificate, that how much this certificate says, how much disability. Based on the percentage specified in the certificate, we are going to allow you. Now that certificate will not be valid for the lifetime. There will be a validity period. This is valid for next 6 months. This is valid for next 1 year. After the period is over, you'll have to again take that HDR. Because see, if the treatment and everything is happening, so there are chances, no, that the HDR might recover and its disability comes down even below 40% or even below 80%. Yes or no? Or it might also increase because the treatment is not showing any improvements. So till this time, we certify that it is disability is 80%, means severely disabled. Now next time when you will go, that disability can increase also, decrease also. Getting my point? So based on the medical certificate, you are going to get the deduction. Okay. Now pay attention. One more thing I like to tell you. You are depositing some amount in the special schemes for your HDR. Do you remember this amount, this amount? Are you depositing? Thinking that God forbid something happens to you from this scheme, he will start getting the benefits. But the reverse happened. The HDR dies before you. Now the person for whom you were investing in the scheme, that person himself is not alive. Will you still keep on investing in the scheme, or you will stop investing? You will stop investing. And the money which you had invested earlier, that will also again come back to you. Will be treated as deemed income for you. If the schemes in which you were depositing for the benefit of your HDR, and your HDR pre-deceases means he dies before you, then from that scheme, whatever amount you will receive now, that will be fully taxable under the head IFRS as your deemed income. Will you remember this much? Sure. Very good. See, this is the entire deduction which I have just now discussed. Read it fast. What if your HDR's disability is 75? No. Less than 40% means not disabled. Minimum 40 or more. Now in the exam they will give you your HDR's disability percentage was disabled or not disabled? Disabled. Disabled. 40 or more. Disabled. Less than 40, not disabled. So minimum 40 should be there. Examiner deliberately plays with you like this. What is difficult in this section? Nothing is difficult. So try to confuse the students. How can we confuse? Instead of giving 65%, he is giving 65%. You will understand 75,000. If he is giving 70% disability, you will understand 75,000 deduction. If he is giving you 80, then you will be confused. 40 to 80, it is 75 or 1,25,000. The moment it touches 80 or more, 1,25,000. Less than 80, 75, but it should be 40 or more. Ordinarily disabled, severely disabled. Sometimes they are not going to give you percentage also. They'll state right, ordinarily disabled. then you are supposed to understand 40 or more but less than 80. They'll write down severely disabled. You are supposed to understand 80 or more only. Understood? Read note number 1, note number 2, and note number 3. Don't read note number 4. Done, sir? Same things I have explained now. Now, read this section, ATU. Assessee, you are handicapped. Hence ATU. Assessee, you are handicapped, ATU. Okay. Now, what will be your disability percentage? 40 or more, less than 80. Ordinarily disabled, take 75,000. If the disability percentage 80 or more, severely disabled, take 1,20,000. So, if the assessee is earning GTI, from the GTI of the assessee is going to get this deduction, provided the assessee himself is a handicap. Even if assessee is 100% handicap, still he will not get ATU deduction if he is not a resident. He must be a resident individual and a handicap also. So only the resident handicaps will get ATU. What if non-resident handicap is there? No ATU deduction. No. And for this also certificate you will have to bring. Understood, no? Now, pay attention. Hmm? Ram is the brother of Sham. Sham is the brother of Ram. Hmm? Understood? Now what is happening? Ram, Sham is dependent. He is dependent on Ram. He is dependent on his brother. And Ram is incurring expenditure for Sham. You must be now aware that what I am trying to do now. Ram is a resident individual incurring expenditure on his HDR. Can Ram claim 80DD? Yes. Sham himself is a resident individual who is a disabled person. So from his total income, from his GTI, he can also claim ATU. He can also claim. But if Ram is claiming 80 double D on the basis of his disability, he himself for his disability cannot claim ATU. If he himself for his disability claiming ATU, then Ram cannot claim 80 double D for him. For the same person's disability, two places deductions not possible. Either Ram will take 80 double D, then ATU will not be available to him. If he will claim ATU, 80 double D will not be available to Ram. Both this and this not possible. Only this is possible. So which one will be better according to you? Let Ram claim 80 double D and for Shyam don't claim ATU, or claim ATU for Shyam and let Ram say don't claim 80DD. Which one is better? You cannot say right now. You'll have to first check the total income. The GTI of Ram is higher, so let him claim 80DD. Tell Shyam not to claim ATU. But if GTI of Shyam is higher, tell him to claim ATU. Tell Ram don't claim 80DD. So it depends whose GTI is higher. So that person should be the person who should claim the deduction to get the tax benefit. Yes or no? Now, as a client, if you have to give such advice, you will be advising on this basis only, no? As a chartered accountant to your client, if you want to give this advice, right? So this was 80DD. Any question on 80DD? Let's see. Let's solve question number 8 also. 80D concept is there. 80D concept is there. So one question on 80D which was remaining that we are going to solve, and then 80DD is there, no? One or two questions on 80DD is also there. See, 1-2 questions on 80DD that also will solve. Okay. So first come to question number 8. Mr. Y, aged 40 years, paid medical insurance premium of 22,000 during the previous year 24-25 to ensure his health as well as health of his spouse and dependent children. SSDC, him and his family. Mediclaim is 22. Okay. Also paid medical insurance premium of 33,000 to ensure the health of his mother, 67 years. Mother is a senior citizen. For mother also he has paid mediclaim of 33. But mother is not dependent on him. So what? Mother may or may not be dependent. No problem. This 33,000 will qualify. He incurred medical expenditure of 20,000 on his father, aged 71 years, who is not covered under Mediclaim policy. Father is also not dependent upon him. Wow, very good. Father may or may not be dependent. But for father, you are not paying Mediclaim. You are not paying Mediclaim. Okay, but for him, you are incurring the medical expense, not 20. Even this will qualify. So for father, mother both, 33 and 20,000. Okay. And for you and your family, you are paying CGI just 6,000. So 22 plus 6, 28 will be allowed subject to maximum 25. Okay. But for parents, it will be 33 plus 20, it will be 53,000. Subject to maximum 50, it will be allowed 50,000. 50 plus 25, 75,000. Deduction is 75. Got it? Now come to this one. Illustration number 9 and 10 also. Mr. X is a resident individual. Okay. See, the first line I will write down X is a non-resident. And you start claiming what? 80DD. Wow, gone. Because in the very beginning I have told you, deduction is available only if the assessee is a resident. Now they will not directly give you, they will give you in such a way that deliberately you will commit mistake. Even if you don't want, even if you are cautious, still you will commit mistake. They will not give you in the beginning that assessee is a resident. No. They will not give you in the end also. In between somewhere, no, they will slip this information. The person for whom he is incurring this expense is a non-resident along with him. Grandfather for whom he is incurring the expenditure is a non-resident along with Mr. X. So Mr. X is also non-resident. His grandfather is also non-resident. Will he get 80DD? No. There are many reasons. Number one, assessee is a non-resident. Number two, he cannot claim for grandfather. Yes or no? Now what if his grandfather is a resident? Then also he cannot claim, because for grandfather he cannot claim only. Getting my point? What if his grandfather is a resident? He cannot claim. But what if resident father? Non-resident father? Still he cannot claim because he is still a non-resident. The information I have not changed. Understanding? So be ready, be prepared for these, because see, in these type of sections now, they don't have any other choice to put you in such troubles, because they cannot make difficult questions out of this. No, the sections are so obvious, so easy sections. They can at least try to manipulate you like this. So don't get manipulated. Be very sane in the examination. You don't have to commit such silly errors. When you will come out of the exam, you will think that, oh my god, shit, deduction was not available, still I took the deduction. 2 marks gone. Getting my point? This should not be your feeling coming out of the exam. Now pay attention. X is a resident, so X is an eligible person. Deposits a sum of 50,000 with Life Insurance Corporation every year for the maintenance of his disabled grandfather. See, the 50,000 which you are depositing, no, it is a deposit made in special scheme for a dependent relative, handicap dependent relative. So this amount has to be ignored. But this amount to be spent is necessary to claim 80DD deduction. So if you are spending this 50, hence you are eligible to get 80DD. But the amount which you are spending, you have to ignore it, because the deduction is not based on amount spent, it is based on the disability percentage. Okay. Now, the disability is of a grandfather. Grandfather is not equal to HDR. We don't call it HDR only. Hence, even if Mr. X is a resident, he is not eligible to claim deduction under 80DD. Since grandfather for whom he is depositing the money is not a specified relative who is a disabled dependent, hence 80DD is not available. Now all these other details are given, no, are just given extra to make the question big and confuse you. Okay. Compute the amount of deduction they are saying under section 80DD. Exercise the option of shifting out. What is the amount of deduction? Nil. And here in illustration number 10, deduction is the deposit made for his dependent father. So dependent father is equal to HDR. Do you remember relative SSPC? P for parents, father is covered. So here he is eligible to get 80DD deduction, and either he can get 75,000 or 1,25,000 based on disability percentage given in the certificate. Yes or no? So this was your ATDD. Now one more question is there in illustrations. Oh sorry, test your knowledge. Two, three more questions are there. This first question I gave you to solve no yesterday. I am going to discuss this also. Okay. Second question. Examine the allowability. You are just supposed to say that whether it is allowed or not allowed. If yes, then how much? That's it. If he has exercised the option of shifting out. Perfect. Rajan, a resident individual, has to pay to a hospital for treatment rupees 62,000 and spent nothing for life insurance or for maintenance of dependent disabled. See, he is not spending anything on the life insurance or he is not spending anything on the maintenance. So he is not spending anything for life insurance, he is not giving anything for maintenance. But for his dependent disabled, he is incurring a cost of medical treatment. He will be eligible to get ATDD deduction. So here ATDD will be allowed. How much? Either 75,000 or 1,25,000 based on the disability percentage, not given. But this amount of 62,000 will be ignored. Only 75 or 125 will be available. Done, sir? Now, Varun, a resident, again the assessee is a resident, spent nothing for treatment in the previous year but deposited 25,000 with LIC for maintenance of dependent disabled. He is also eligible to get the same deduction. So even if he has not spent on what treatment, but he has deposited the money, no, hence he is eligible to get ATDD. Now Hari, who is a resident, has incurred 20,000 for treatment and 25,000 were deposited with LIC for maintenance of dependent. He is doing both the expenses. So will he get double deduction or only single? Single only. Okay. How much? The same thing. For Hari also it is same. Done. So this was your question number 2. Difficult question, no? Very difficult questions are there. Come to question number 1. Examine the following statements with regard to the provisions of income tax. You have to just examine. You have to see, check whether the statement is correct or not. If correct, then okay. Incorrect, then why it is incorrect? Correct, then as per what? What section, what provision you are saying it correct? Yes or no? During the financial year 24-25, Mr. Amit paid interest on loan availed by him for his son's. Oh, so this is on higher education. So 80E, under section 80E, whenever the loan is taken for the higher education of self, spouse, children, or a student for whom the assessee is a legal guardian. For these persons' higher education, a loan is taken, and on that loan, whatever interest is given, that interest will be allowed under 80. So they are saying during the financial year 24-25, Amit paid interest on loan availed by him for his son's higher education his son is already employed in a firm, Mr. Amit will get the deduction. See, it is not necessary that the son for whom you are taking the higher education loan should be dependent on you. May or may not be dependent. So what? So even if he is not dependent on Amit, still the Amit is eligible to claim deduction under 80E. 80E for interest on higher education loan. Is this statement correct? Yes, this statement is correct. Even if the son is not dependent on him, no problem. For that son, if he has taken the higher education loan, interest on that higher education loan will be allowed. Subscription to notified bonds of NABARD. Qualify for deduction under 80C? Yes, sir, qualified. You have told 7. Yes or no? In order to be eligible to claim deduction under section 80C, investment contribution subscription in eligible or approved mode should be made out of income chargeable to tax? No, for 80C there was no such requirement that the payments, investments, contribution should be made only out of your taxable income. No, for 80C it was not required. This statement is wrong. No, for 80C it can be made from any income, whether taxable income, exempt income, any income. But for 80D and 80CCC, it was required that the contribution or the payments under 80D must be made out of taxable income only. Contribution to LIC's pension fund of any other approved insurance company must be made only out of taxable income. Yes or no? For 80C, it was not required, so this statement is wrong. Where an individual repays a sum of 30,000 towards principal and 14,000 as interest in respect of loan taken from pursuing eligible higher education study, deduction allowable under 80 is 44,000, irrespective of tax regime. No, first of all, the deduction under 80 is available only for interest and not for principal, and that is available only under section. Only if you don't follow 115 BAC. If you follow 115 BAC, you are not going to get any deduction, including 80. So what are you saying? Under any tax regime it is available? No. Only if you don't follow 115 BAC, then it is available. And if it is available, it is not available for principal also. It is available only for interest. So this statement is wrong. Correct now? Next one. Sheila, a widow of Mr. Satish, who was an employee of XYZ Limited, received 7 lakhs on 1/5/2024, being amount standing to the credit of Satish in NPS account, in respect of which deduction has been allowed under 80CCD to Mr. Satish in any earlier period. Such amount received by her as a nominee on closure of account is deemed to be her income. No, sir, no. This is fully exempt. If NPS account is closed on the death of the assessee, and whatever amount coming from there on closure to the nominee, that is fully exempt. How can you see that? How can you say that it is taxable? Yes or no? So this statement is wrong. It is not taxable, it is fully exempt. Next one. Vishal, a central government employee, contributed 50,000 towards tier 2 account of NPS. See, yesterday only we did 80CCD. This is your NPS account, no? This is your NPS account. Here you also contribute, own contribution is done, employee's own contribution, assessee's own contribution is done. Your employer also contributes. Yes or no? So this account where you and your employer both contribute, this is known as tier 1 account, or also known as primary account, main account. If you want to contribute more, excess contribution you want to make, then that excess contribution cannot come to tier 1. The tier 1 balances should not be disturbed, the government says. So if you are a central government employee and you contribute more, you want to contribute from your side, you want to contribute more to your NPS, so you can contribute. We'll open an additional account, tier 2 account, and will associate that account with your tier 1 account. This will be linked. Yes or no? Both the accounts will be linked. But in tier 1 account, regular contributions will go. Excess contribution, whenever you want to make those excess contribution in tier 2 account, also known as additional account or a secondary account. Whatever excess contributions you make here, no, they are not eligible for deduction under 80CCD. Whatever contribution, regular contribution, normal contribution you make to your tier 1 account, only they are eligible for deduction under 80CCD. This excess is not eligible under 80CCD. You cannot claim 80CCD1, 80CCD1B for your contribution to tier 2 account. So what is the point of contributing here? Not to contribute. The employees stopped contributing. If you are not giving us any benefit in terms of deduction, then why to contribute? Government say no, don't do it. Come here. We are not giving you this deduction under 80CCD. So what? We are going to give you under 80C. But only if you are a central government employee and you promise that for a minimum period of 3 years you are going to keep this amount deposited over there. Okay, so that is an extra requirement. This deduction will be allowed under 80C only if it is made in tier 2 account by a central government employee only. Done, sir? So what is written? Same would be eligible for deduction under CCD. Wrong. It will be eligible under 80C. And if you are following what? 115 BSE, then that will also not be allowed. Only if you are following normal tax regime. You are not following 115 BSE, only then it is allowed under 80C. But you cannot claim it under 80CCD. This statement is wrong. Got it, sir? So this was the entire question number 1 which I gave you yesterday. In this 80E I have not yet taught you, but whatever I have explained, through that you would have understood. Okay, no? So now we are going to do 80 DDB, then 80E series, entire series we are going to do. And we are going to solve few questions also today. Okay. See, now we are going to do section 80 DDB and all. Okay. See. 80U is done, 80 DDB. Okay. Pay attention. Assessee can be individual or HUF, but he should be a resident also. This is the third section where there is a requirement that the assessee should be a resident. So if the assessee is a resident individual or HUF, that assessee incurs expenditure on treatment of any specified disease. Now see, now the expenditure has to be incurred on HDR. No. Medical treatment of HDR, deposit in, no. Now incur expenditure for treatment of specified disease. Now what are the diseases which are specified? See, the disabilities which were specified, those disabilities were specified in Rule 11D. Just after that, there is one more rule, Rule 11DD. Which rule? 11DD. In that rule, there are certain ailments, there are certain, diseases which are specified. Like cancer is there, leukemia is there, AIDS is there, many diseases are there. Okay, no? All those diseases are, deadly diseases. So, the treatment cost of such disease is comparatively higher. And you are incurring that, treatment cost. Treatment of these diseases. The treatment cost you are incurring. See, who has got this disease? The person who is suffering from this disease is a patient. Now, patient can be assessee himself. If the assessee is individual, then patient can be assessee himself or any of his dependent SSPC. Dependent spouse, dependent siblings, brother, sister, dependent parents and dependent children, or the assessee himself might suffer from these diseases. So treatment cost he is incurring. Or if the assessee is HUF, then any dependent member of that HUF is suffering from this disease and HUF incurring such expenditure. Now such expenditure incurred will be allowed as a deduction under 80 DDB. Now whatever amount of expenditure is incurred, that entire amount will qualify under section 80 DDB, and under section 80 DDB that amount will be allowed, but subject to a maximum of 40,000. Just imagine, they are giving the deduction only of 40,000 rupees. So the expenditure can be incurred by any amount. That entire expenditure will qualify for 80 DDB. But the deduction under 80 DDB will not be the entire amount spent, it will be maximum 40,000. But if the patient was a senior citizen, then it will be given up to 1 lakh also. Getting my point? Now in 80 DD, what we used to do? We used to ignore the expenditure incurred on HDR. Here the expenditure will only be allowed as a deduction, but to the extent of maximum 40,000 or 1 lakh. Got it, sir? Now please pay attention. The deduction which you are getting now for the expenditure, for example, for that expenditure the employer is giving you reimbursement, or this patient had a mediclaim, so medical reimbursement from the medical insurance company might also come. So we were supposed to give you the deduction of amount spent or 40,000 or 1 lakh, as the case may be, whichever is lower. Hello sir, this amount we were supposed to give you as a deduction, but you are recovering this amount from your employer is reimbursing you. Do you remember medical facility given by the employer? Perquisite we did. In that medical facility, employer can meet the cost also, or employer can give you the reimbursement also for the medical treatment, no? So you got the medical treatment done for these patients and you took the reimbursement from the employer. Or for these patients, mediclaim would be taken, so medical insurance company might also give you a reimbursement. So the amount of deduction will be ignored to the extent of such reimbursement. For example, amount spent on the treatment was 1,50,000. How much? 1,50,000. See, these limits are very old limits, very old limits. And since many years, these limits have not been changed only. These limits require a lot of changes also. But the government is deliberately not changing, because the more limits will be given, the assessees will be able to claim more deduction, no? So why to give more deduction if everyone is happy? Let it go 40,000. 40,000, just now imagine 40,000. Is it an amount to be given as a deduction? Very small amount. The expenditure would be incurred in lakhs, but the deduction is only 40,000. Expenditure will be incurred in lakhs, but if it is for senior citizens, it will be only 1 lakh rupees. So forget about that. Still, they are giving us the deduction. But on top of that, what they are saying, that the amount which we were supposed to give you as a deduction, 1,50,000 you incurred as a cost for a patient who is a senior citizen. So out of 1,50,000, you cannot claim entire 1,50,000, but you can claim up to 1 lakh. Claim 1 lakh. But wait, did you get any reimbursement from the employer? Did you get any reimbursement from the medical insurance company? Yes, to that extent the deduction will not be allowed. Meaning, if you are getting a reimbursement of 80,000 from the insurance company or from your employer, how much deduction you are supposed to get? 1 lakh. Either the expenditure or 1 lakh, whichever is lower. Why we are taking 1 lakh? Because the patient was senior citizen. So this amount, whichever is lower, we were supposed to give you as a deduction. Out of this amount, reduce 80,000. The reimbursement which you are getting from your employer, the reimbursement which you are getting for that same treatment, the reimbursement you are getting from the insurance company. How much is remaining? Only 20, we'll allow you only 20. But what if the entire 1,50,000 amount spent on the treatment, the entire 1,50,000 given by the employer, given by the insurance company, then you are not going to get any deduction. Out of 150, we were supposed to allow you only 1 lakh. And that entire 1 lakh you have recovered, no? The moment you are getting 1,50,000 as a reimbursement. So full 1,50,000, if you are getting reimbursement, full 1 lakh rupees you have recovered. So no deduction anymore. 80 DDB will not be allowed. Understood, no? Now see, if you want to claim this deduction, there is no medical certificate required. Just like the way it was required for HDRs. Medical certificate is not required. Go and take your take this patient to any specialist doctor. Which doctor you will take him? Specialist doctor. On the prescription of the specialist doctor, the name of the patient should be written and what disease he is suffering from. On the prescription it should be written. That's it. Bring the prescription of a specialist doctor, that will be sufficient for us. We are going to give you this deduction. Now, MBBS doctor or MD doctor is not there, specialist doctor. MBBS means CA foundation, MD means CA inter, and specialist means CA final, chartered accountant. Understanding? So there are 3 levels in doctors also. MBBS are very okay, foundation cleared student. MD inter cleared, okay, still good. But specialist doctor, to become a specialist doctor, first to become MBBS you take 5 years, 2-3 extra years to become MD, and 2-3 extra years to become specialist doctor. And at every stage you have to give some exam. Only then you become a specialist doctor, MD doctor. Yes or no? So prescription of a specialist doctor is required. Will you remember this 80 DDB? Easy, no? Now entire D series is over. Okay. Now coming to E series. Today one question we have solved. In that question number 1, this same deduction was there. Okay. If you are an individual, now there is no requirement that you should be a resident also. Yes or no? You can be a resident, you can be a non-resident. You have taken a higher education loan. You have taken a higher education loan from any bank or financial institution or any approved charitable institution. From these institutions, from any bank or any financial institution or any approved charitable institution, you are taking higher education loan. Whose higher education? Higher education for yourself, higher education for your spouse, higher education for your children. Spouse or children may or may not be dependent on you. Or higher education of any student of whom you are the legal guardian. For example, my brother and sister-in-law, my brother and sister-in-law both died in a car accident. So at the time when my brother and sister-in-law, they were dying, no, they told me to take care of their son, who is my nephew. So for my nephew, I am his legal guardian. So for his higher education also, if I am taking the loan, and on that loan, whatever interest I have paid during the previous year will be allowed as a deduction. Full amount will be allowed as a deduction, 80 over. But wait, what is higher education? Any course of study which you pursue after standard 12th. So once you clear your standard 12th and whatever course of study you pursue, no, that is a higher education. You all are doing CA right now. So to start doing CA, you have to first at least pass standard 12th. No, so this is a course which is a higher education. For MBA, MCOM, BCOM, all are higher education only. Any course of study which you pursue after passing your standard 12th exam is a higher education. Usually that is costly. Okay, no. So to meet the cost of that higher education, you might not have that much money. So you might take a loan from any bank, financial institution or a approved charitable institution. Now whenever you will start the repayment of this loan, from that year onwards, whatever interest will be there, that will be allowed fully. But the deduction will be allowed for 8 years maximum. So the year in which you are taking the loan, from that year 8 years, no, not from that year. The year in which you have started repayment of loan and interest. So the first year of your the first year in which you have started paying the loan and interest, that is the year of repayment. From that year count 8 years. So that year will be counted, and after that 7 more years will be counted. So including that year there will be 8 years. So for these 8 years, whatever interest you will pay, that entire amount of interest we are going to allow. But wait, what if the loan repayment finishes before the end of those 8 years? Then till the year you are making the loan repayment, till that year whatever interest you will pay, that we will allow. But what if the loan repayment goes beyond 8 years? Then to the extent of 8 years, till 8 years, starting from the year of repayment, from that year 8 years you are supposed to count. Okay, so for these 8 years, if the loan repayment goes beyond 8 years, so for these 8 years, whatever interest you have paid, that interest we will allow. ATE over. Will you remember all these points? Remember one more important thing. Whatever higher education loan you have taken, on that loan, interest you have paid, that will be allowed. Principal repayment of loan is not allowed. Not here, not anywhere else. The money which you have taken, you are giving it back. We are not going to give you any deduction for that. But principal repayment of housing loan will be allowed under ATC. Principal repayment of this loan will not be allowed. Yes or no? Okay. ATE is over. E for education. What education? Higher education. Okay. Now coming to double E. One E is coming extra. So something extra you are going to get here. Something extra. Meaning that, see, if you are an assessee, you can be an individual. Or only individual. Resident, non-resident, any type of assessee. Okay, no, but you should be an individual. You are taking a housing loan. Loan is a housing loan. But wait, any housing loan? No. Only a housing loan which is taken for purchase, acquisition. Did I say repairs? Did I say renewals? Did I say reconstruction, construction? No, only for purchase of a house property. No, residential house property. So to purchase a residential house property, you have taken a housing loan. And on that housing loan, whatever interest you have paid during the year, out of that 2 lakh will be allowed under house property head. Because for SOP, maximum 2 lakh interest you can claim under the house property head. What if the interest is more than 2 lakhs? Only 2 lakh will be allowed under house property, no, under 24B. So whatever extra interest which you could not claim there under the house property head, under section 24B, claim that extra interest as a deduction under ATEE, subject to a maximum of 50,000. So that extra interest we are going to allow you under ATEE, but only to the extent of maximum 50,000. Okay, but wait. If you want to claim that extra interest which you could not claim under the head house property, yes or no? If you want to claim that extra interest under section ATEE, there are few conditions which must be fulfilled. The loan, housing loan, must be taken from any bank only or a housing finance company only, not from anyone else. If you are taking a housing loan from a private person or any other person, no, that housing loan interest we are not going to allow. Take the loan from any bank or any housing finance company. So first requirement, the loan can be taken from this person only. Number 2, the loan was sanctioned. Please remember the date of sanction the loan during 2016 and 17. Any loan sanctioned prior to this, not eligible loan. Any loan sanctioned after this, not only the loan which was sanctioned between 1st April 2016 to 31st March 2017. Only this loan which is sanctioned between this period, yes or no, 16-17. The amount of loan should not be more than 35 lakhs. And by taking this loan, whatever property you are purchasing, the value, purchase value of the property should also not be more than 50 lakhs. And as on the date on which the loan is sanctioned, you should not be owning a single house property, meaning that you are taking this loan for your first property. And first property, by the way, you are not going to let out, you are going to stay only. So that will be your SOP. And if it is your SOP, interest on that will be allowed up to 2 lakh only. And the balance interest, excess interest, we are going to allow under ATEE, subject to maximum 50,000. Loan must be sanctioned. Loan must be sanctioned by whom? By any bank or a financial housing finance company during 2016-17. The loan amount should not be more than 35 lakhs and the purchase value of the property should not be more than 50 lakhs. And the date on which the loan is sanctioned, as on that day, you should not be owning a single house property. The loan is taken for your first property. Only then, if all these conditions are fulfilled and you have taken a loan, on that loan, whatever extra interest which you could not claim under the head house property will be claimed under the under this section to the extent of 50,000. Done? Will you remember this? Now pay attention. You must have taken this loan in 16-17. Don't you think that loan is still outstanding in 24-25 in our previous year? And in our previous year, the interest is 2,80,000. Possible or not possible? Out of that, 2 lakh you claim under 24B and 80,000 you will bring here, but will be allowed subject to maximum 50. Can you say this same loan will be outstanding in the next year also? So in the next year, the interest was 2,44,000. 2 lakh you will be claiming under 24B and 44,000 you will be claiming under this section, subject to maximum 50. And in the third year, next to next year, the amount of interest was 2,22,000 only, 23,000 only. So 2 lakh you are going to claim under 24B and 23,000 you are going to claim. 23,000 you are going to claim under this section. You are going to claim the deduction under this section till the time your loan interest does not become 2 lakh or less. The moment your interest will become 2 lakh or less, entire interest will be allowed under 24B. Now no excess interest, so no 80EE deduction. Got it, sir? Hello? Now see what I have done now. I have copied this entire part. Copy. And then paste. Next page. The only thing changed is the section number. Now 80EE becomes 80EEA. Assessee remains same. Loan must be taken from any bank or housing finance company only. Loan taken for the purpose of acquiring residential house property. Excess interest will be allowed under 80EEA also. The interest which you could not claim under house property head, that excess interest can be claimed under 80EEA also, but subject to maximum limit of 1,50,000. Here the limit is 1,50,000. So bring that excess interest under 80EEA and claim to the extent of 1,50,000. Which one would you prefer, 80EE or 80EEA? But for that the conditions are different. Now the loan must be taken between 1st April 19 to 31st March 22, 1920, 2021 and 21-22. You have taken loan in any of these three previous years, meaning the loan must be sanctioned. Loan must be sanctioned between these previous years. Amount of loan, any amount. You take any amount loan. Now there is no limit of 35 lakhs. Take any amount. But remember, by taking this loan, whatever property you are purchasing, its purchase value can be any amount, but the stamp duty value of that property cannot be more than 45 lakhs. Last time it was the purchase value, which should not be more than 50 lakhs. The loan amount should not be more than 35 lakhs. Here, loan amount can be any loan amount. Purchase value, any purchase value. But remember, the stamp duty value of the property should not be more than 45 lakhs. And as on the date of sanction of the loan, you should not be owning a single residential house. Okay. Meaning this loan you have taken from 1920 to 21-22 to acquire your first residential house. And you were never eligible for 80EE. If you were eligible for 80EE and you are taking this loan also, you are not going to get 80EE. Meaning you already had a house property in your life, no? Why did you sell it? Otherwise, what people will do? People will sell that house property, repay that old loan, and again repurchase that property. Hello, by taking this loan so that they can claim more deduction. No, not allowed. 80EE, if you were eligible, you are not going to, we are not going to allow this 80EEA. Till what time you are going to get this deduction? Till the time your entire interest does not get covered under house property. Till the time it is above that limit of 2 lakh. Till that year, every year you are going to get. Every year, if any excess interest is coming, that excess interest you are going to claim under 80EEA to the extent of maximum 1,50,000. Sure, sir. Now coming to 80EEB. 80EEB, electric vehicles. Electric vehicles means electric scooters can be there, electric cars can be there, electric motorcycles can, any electric vehicle. So you are an assessee individual. You can be resident, non-resident, you can be any person. But you are taking a loan to purchase an electric vehicle. Now from whom you are taking that loan? Any bank or any specified NBFC, non-banking finance corporation, NBFC, deposit taking NBFC, yes or no? So loan has to be taken from any bank or specified NBFC. On that loan, whatever interest you are going to pay, that entire interest will qualify under 80EEB, will be allowed subject to maximum 1,50,000 till the time you don't repay the entire interest. You don't repay the entire loan. So till the time your repayment goes, it can go for 2 years, it can go for 5 years, it can go for 10 years. Till the time you will be repaying the loan, entire interest every year you will pay will be allowed under 80EB subject to maximum 1,50,000. But remember, the loan must be taken between 1st April 2019 to 31st March 2023. 23. It is not 22, it is 23. So loan must be taken in 1920, 2021, 21-22 or 22-23. Loan must be taken in any of these years. On that loan, whatever, that loan will be outstanding in 24-25 also, maybe. On that loan, whatever interest for 24-25 is there will be allowed under 80EB, subject to maximum 1,50,000. But remember, what should be the value of loan? Any value. What should be the value of the electric vehicle purchased? Any value. There is no restriction. But remember, the loan should be taken between these dates to purchase your electric vehicles, and on that loan, whatever interest you are claiming under 80EEB under this section, that interest was not allowed to you under any other provision of the Income Tax Act. Meaning that, for example, this electric vehicle you have bought for your business. So the loan which you have taken, that is not EV loan now that is a business loan, because now this EV is to be used for your business. So the vehicle which you are going to use for your business, that is electric vehicle, for that vehicle whatever loan you are taking, that loan is no more your personal loan, no more your personal electric vehicle loan. That loan now becomes your business loan, and on that business loan whatever interest you are going to give, that interest gets allowed under PGBP head. So you will take that interest here also? No, we are not going to allow. So they want you to take this deduction for your personal electric vehicle loans. On that whatever interest you would have paid, that interest would not have been allowed under any other provisions of the Income Tax Act. Don't worry, claim it here to the extent of maximum 1,50,000. Got it, sir? This was your 80EEB, which is over. Okay. Now 1 or 2 questions which we are going to solve are very interesting questions. These points, every small details given in these points are exploited in that question. Okay. Now wait. Before we move ahead, now I'm going to talk about 80TTA. There is one section which is 80TTA. Okay, so the deduction under 80TTA is available to any individual or HUF, whether he is a resident or a non-resident, whether the HUF is a resident or a non-resident, will not make any difference. Wait, I will write down this here. The assessee must be a resident. Necessary? No, he can be a non-resident also. Now what the assessee is doing, see, assessee is having interest on savings account, savings deposit account. Is it your income assessee? If you have a savings account, on that whatever interest is coming, is it your income? So if you are this assessee earning this income, now on this income and show this income under the head IFOS. Savings deposit interest taxable under the head IFOS. So definitely if you will show this interest under the head IFOS, will this interest be reflected in your GTI? Yes, that is sufficient. Earn this income, show it taxable in your GTI. Now claim this interest as a deduction from your GTI under ATTTA. First you will have to earn and you will have to show this as a part of your GTI. Definitely if you are taxing this interest under the head IFOS, this is going to be shown as a part of your GTI only, no? Hello? So from your GTI, we are going to give you a deduction under section ATTTA. Either this entire interest you can claim as deduction or maximum 10,000, whichever is lower. Understanding? First you earn this interest, show it taxable in your GTI, and from GTI take this same interest as a deduction to the extent of maximum 10,000. But this interest should be interest on color yellow color savings deposit account. Now this savings deposit account you can maintain with any banking company also, like SBI, HDFC, etc. You can maintain this savings account with any cooperative bank also, Tamil Nadu State Cooperative Bank, or you can maintain this with a post office also, because you can maintain a savings deposit account with a post office. But remember, that entire post office interest you have not shown taxable in GTI. Out of that 3,500 you have claimed exempt and the balance only you have shown taxable. So only that interest you can claim as a deduction, yes or no? And if there was a joint account in post office savings account was a joint account, then you would have claimed 7,000 exemption. So after claiming that exemption, whatever taxable amount you have shown of post office savings interest, yes or no? The entire cooperative savings account in a cooperative bank, savings account in a banking company, that entire savings deposit interest you have shown taxable here. So for example, from HDFC Bank, you are getting interest for the full year, you are getting 5,700 full year interest. In HDFC account, you have a savings account. In that savings account, whatever interest you are getting for the year is 5,700. Now, Tamil Nadu State Cooperative Bank, from there also you are having a savings account. From that savings account, you are getting an interest of 8,820 rupees. Possible? Yes. Now there is a post office. Okay. In that post office, you have a savings account, and that post office savings account is giving you interest of 4,100. But don't you know, from there you are going to take 3,500 as exempt. And how much will be taxable? Only 600 will be taxable. You are going to show this, and this under the head IFOS only. Now if you are showing this entire interest under the head IFOS, how much interest you have shown? 5,700 plus 8,820 plus 600. You are going to show 15,120 as your income taxable under the head IFOS. Now if you will show this under the head IFOS, don't you think that the same amount will appear in your GTI also? This amount is appearing in your GTI, no? While calculating your GTI, have you included this amount as your taxable income under the head IFOS? Yes. Now this amount you can claim under ATTTA, subject to maximum 10,000. Show this much and claim the deduction of 10,000. What if this interest was only 5,120? Then 5,120 or 10,000, whichever is lower, entire 5,120 allowed as a deduction. Now there are certain deductions under chapter 6A. For claiming those deductions, you are not supposed to spend money. You earn such income, show it taxable in your GTI, and from your GTI, that income only will be allowed as a deduction. So they are income based deductions. Earn this income, get the deduction. Earn this income and get the deduction. Income based deduction. ATTTA is one of the deductions which is income based deductions. Yes or no? Now please remember the deduction under ATTTA will not be allowed to an individual who is a senior citizen. No, to senior citizen we are not going to give this deduction. So this is very bad. Usually we have seen that senior citizen get the benefit more only. But this benefit is not allowed only to senior. That is the reason why we are going to do the next section, ATTTB now. Because the senior citizen will claim this deduction for this same interest under ATTTB. And if we don't exclude senior citizen, what will happen? That senior citizen will claim deduction twice. Once under ATTTB also, and second time he'll come in ATTTA and he'll come as a claim deduction here also. So, Mr. Senior Citizen, you are not eligible to claim ATTT. Whatever savings interest will be there, no, will be taken care of in ATTTB. Go and claim there. Okay, but wait. This much you understood? Now one very important thing which I would like to tell you. There is a firm. Now firm wants to open in a bank. The firm wants to open a savings account. Can a firm open a savings account in a bank? Can a firm open a savings account? Firm is doing a business. And for the associates doing business, the bank will offer only current account. No savings accounts can be opened by firm or a company on their own name. So firm cannot open a savings account on its own name. AOP, BOI, company, etc. cannot open a savings account on their own name. Getting my point? So firm cannot open a savings account. No. But wait, this firm has a partner. Partner is an individual. Can the partner go and open a savings account here? So on behalf of the firm, the partner on his name will open a bank account, savings account in a bank or post office or cooperative bank, anywhere. Yes or no? So this individual partner of the firm will open a savings account on his name. Now tell me, on whose name the account is there? Partner's name. But the money will not belong to partner. The firm will give that money to partner to be deposited in savings account. So the money, entire money lying in the savings account belongs to the firm. Partner is having a savings account on behalf of the firm. This savings account is not his own savings account, which he is holding in his individual capacity. No. In this savings account, whatever money which will be deposited, that money will belong to firm. So any interest on that money has to be taxable in the hands of the firm, has to be shown in the computation of total income GTI of the firm, which the firm cannot claim as a deduction under ATTTA, because the deduction under ATTTA is available only to individual or HF. But can the firm claim this? Can the partner claim this interest? No, even partner cannot claim. Why? Because to claim this deduction, partner will have to show this amount taxable as his income in his GTI, which is not showing only. So interest on this saving account will not be allowed to the firm also, will not be allowed to the partner also. Got it, sir? The same logic applies in case of AOP BOI and member. Member can have one account, savings account in a bank on behalf of AOP BOI. So interest, any interest on that savings account cannot be claimed by that member, because he is not going to show that interest in his total income. Yes or no? Who is going to show? AOP BOI. But AOP BOI is not an eligible assessee to claim this deduction. Only individual and HUF. Will you remember this? Sure. Now let's come to ATTTB. Now this is a deduction available to that individual, only individual, or HUF. No HUF covered. only that individual who is a senior citizen. So which type of individual is a senior citizen? Whose age at any, before even looking at the age, this individual must be resident. So here they are not telling you directly that he must be a resident. No, no, no. He should be a senior. Senior citizen means by default he is a resident. And if he is a resident whose age is greater than or equal to 60 years at any time during the previous year, then only he will be treated as senior citizen. Now the senior citizen can have any deposit account. Did I write, what did I write here? Color, yellow color, savings deposit. And here what I am writing, color, pink color, any deposit account. Any deposit account includes savings also, that includes recurring deposits also, that includes fixed deposit also, all the deposit accounts. So even the FD interest, even the recurring deposit account interest, even the savings deposit account interest. So he is having any deposit account, FD, RD, SD, any deposit account. On that deposit account he is earning interest, which he is going to show taxable under the head IFRS. That interest this senior citizen can claim. Even he can claim the interest on FD. Even he can claim the interest on recurring deposit. Forget about savings. Savings definitely he is going to get. So along with savings deposit account, include the fixed deposit account interest plus recurring deposit interest. That these deposits must be kept by him in any banking company or any cooperative bank or a post office also. Yes or no? So wherever he has kept these deposit account, from those deposit accounts, whatever interest he is going to get, which he has shown taxable in his GTI. So whatever interest he has shown taxable in his GTI, that entire interest we will allow him under 80TTB, subject to maximum limit of 50,000. How much? 50,000. 10,000? No, 50,000. Savings plus FD plus recurring deposit, total interest taxable under the head, taxable under the GTI, take that total amount, deduction under 80TTB. Maximum 50,000 can be claimed. Done. 80TTB over. Will you be able to remember these things? Sure, no? Okay. Now let's come to questions. We'll start solving the questions. Illustration number 19. I'll read. Mr. A, resident individual, aged 61 years, means he is a senior citizen, has earned business income computed. You are not supposed to compute business income. It is 1,35,000 given. They have computed given. He is earning lottery income of 1,20,000 gross. This is his IFRS income. He also has interest on fixed deposit of 30,000 with banks. Interest on fixed deposit with bank. So first of all, this is his income from other sources, and he is also going to claim deduction under 80TTB for this to the extent of maximum 50. He invested an amount of 1,50,000 in the public provident fund account. For that he is going to get deduction under 80C. What is the total income of Mr. A if he exercises the option of shifting out? Simple, very simple. See, to calculate total income, I need his salary. Do I have his salary? No, no income from salary. Write down nil. Do I have his income from house property? No, that is also nil. Do I have a PGBP income? Yes, they have calculated. It is 1,35,000 given to me. Do I have capital gain income? No, no capital gain income is there. Do I have income from other sources? Yes, they have given me income from other sources. Two incomes from other sources. One is winning, another is interest on FD. So winnings was how much? Winnings was 1,20,000. So 1,20,000 winnings plus 30,000 interest on bank FDs amounting to 1,50,000. This 1,50,000 is my IFRS income. Very simple. Now we are supposed to add all of them. It will be 2,80,000. Can I say this 2,80,000 is my GTI, gross total income? Hello sir. Any other income is there? 2,85,000. Sorry. 5,000 more I have to take. No, 2,85,000. Now it is okay, no? Now pay attention. From this GTI, I will be taking the chapter 6 deduction, but don't do it. Wait. In your GTI, do you have any special income? Separate it. Do you have winnings? Yes, separate, because from there you cannot take chapter 6A. So before taking chapter 6A, always be cautious. Ask yourself, I am going to take chapter 6A deduction from my GTI. Is my GTI normal GTI? Yes, then I can claim. But is my GTI normal? No, it has some special incomes, winnings, LTCG, STCG. Yes, no. From there, chapter 6 I cannot be claimed. Separate it. I'll claim it from the balance GTI. Yes or no? So what I'll do? I'll reduce. I'll reduce what? My winnings income. Then later on again I will add it back. Why? Because winnings I have to show in the total income. I am reducing just because I want to find out that amount, balance GTI, from where I can claim chapter 6 reduction. Yes or no? So winnings was how much? 1,20,000. I will reduce that. How much? It will be 1,65,000 balance GTI. Sir, yes or no, sir? From this balance GTI, will I get chapter 6 deductions? Yes. First deduction is ATC. How much? PPF deposit is how much? 1,50,000. So entire 1,50,000 I can claim under ATC. ATC limit is 1,50,000. It is not crossing 1,50,000. 1,50,000 I will claim under ATC. And can you see 80 TTB also I can claim? 30,000 which I have shown as my FD interest in my GTI, that 30 also I can claim under 80 TTB, no, because I am a senior citizen. So 30 or 50, whichever is lower, 30 I can claim here. Now tell me one thing, your deductions total is 1,80,000. Macha, can you claim deduction more than 1,65,000? Your balance GTI is only 1,65,000. So deductions cannot be more than that 1,65,000. So I will restrict this to the extent of my balance GTI. This or this, whichever is lower. So I will claim this entire 1,65,000 as a deduction over here. What will be my remaining total income? It will be nil only. But wait, this is not my total income. Yes, I will have to add winnings. Winnings will be my 1,20,000. Now my total income I can say is 120 only, which comprises only of winnings income. There is no balanced total income. Sir, balanced total income is not there, meaning the basic exemption limit is entirely unexploited. Yes, sir. Unabsorbed basic exemption limit is there, no? 2,50,000. That I cannot adjust from my winnings. On my winnings entirely I have to pay 30% tax. Yes or no? So if I calculate the tax at the rate of 30% on winnings income of 1,20,000, that will be 36,000. Yes or no? Now wait. From this I will get rebate. Why? Because my total income is less than 5 lakhs. I am a resident, I am an individual, and my total income is less than 5 lakhs. So entire tax or 12,500, whichever is lower. So 12,500 I can take as what? rebate. 36 or 12,500. 36,000 or 12,500, whichever is lower. Yes or no? So what will be my income now? Balance, income tax. This will be 23,500. Yes or no? 28,500. Where did it? Correct, no? This is okay. Now on this, I will have to add 4% cess into 4%. So that will be 940. So I'll get 24,440. This is my gross tax liability. But wait, winnings was more than 10,000. 1,20,000. So on winnings, the TDS would have got deducted. So the TDS also I will have to reduce. So this is my gross tax liability minus the TDS on winnings, which was 1,20,000 into 30%, 36,000. That 36,000 I will reduce from here. What amount I will get? I'll get 11,560. This will be my negative amount, which I will claim as refund. If they would ask you to calculate the tax also, then your calculation would have been like this. But unfortunately, they have not asked you. So you can stop yourself. You can stop yourself here. But what if in the same question they ask, calculate the tax also? It should be calculated like this. Will you be able to do it? You just have to do the presentation. Everything I am solving only. You just have to present it in a proper way, in a statement. That's it. Against this, what is to be written in the particulars, that you should know. At least that you can do. Done, no? Okay. Question number 19 done. Okay. Now, before question number 19, I'll go to the last question which we did. Which was the last question which we did? Illustration number 9, 10 we have already done. Yes or no? Now we are coming to 11. 11. Mr. B has taken 3 educational loans on 1st April 24. The details of which are given below. For whose education loan was taken? For himself, his son and daughter. So the loan is taken for eligible persons. Self, spouse, children. Children may or may not be dependent on me. Okay, no? Or a student of which I am a legal guardian. So for myself, for my son and for my daughter, I can take the loan. Yes. Purpose of loan, MBA. We do MBA after 12th only. BSc we do after 12th only. BA also after 12th. So all are higher education. Amount of loan is 5 lakh, 2 lakh and 4 lakh. Annual repayment cross, because repayment of loan does not get qualified under section 80E. Only the interest will be qualifying 20, 10 and 18. All the interest will be allowed. So what will be the total amount? 20 plus 10, 30. 30 plus 18, 48. So total amount deductible under section 40E will be 48,000. That is the amount available as a deduction under 80. If they tell you assessee is not shifting out of 115 BSc, then this 48 is not available. But every question they are giving you. Shifting out, not shifting out. Shifting out, not shifting out. Yes or no? Okay. Solution, 48,000. Final answer. Done? Okay. Now 80EE. This question is good question. Okay. Mr. A purchased a residential house property for self-occupation at a cost of rupees 45 lakhs on 1st April 2017 he purchased. Okay. In respect of which he took a housing loan of 35 lakhs from a Bank of India at 11% per annum on the same date. The loan was sanctioned on 28th March 2017. Okay. Compute the eligible deduction in respect of interest on housing loan. They are not telling you compute the interest on housing loan deduction under 24B. They're not telling you compute the amount of interest. They're not telling you compute the amount eligible under 80EE. They are telling you eligible interest allowed under the Income Tax Act. So some will be under 24B and the balance will be under 80EE. Whatever deductions you will take under both these sections, that is the total amount. That is known as eligible deduction in respect of interest. Getting my point? Now wait. Tell me, if Mr. X has acquired, okay, assuming that the entire loan was outstanding as on 31st March 2025, entire loan is outstanding. So how much loan did you take? You took 35 lakh rupees of loan. On that 35 lakh, if you calculate 11%, your interest will be 385. That I could have also calculated. You give me the same answer. Okay. That anyone will do, no? 3,85,000. So wait. If I say the loan outstanding during previous year 24-25 is equal to 35 lakhs. On that, interest at the rate of 11% per annum from 1st April 24 to 31st March 25. For the full year, I will have to calculate the interest, no? Because the loan remains outstanding throughout the year. Okay, so I would have paid the interest throughout the year. That interest at 11% is 3,85,000. Now this 3,85,000, out of this, up to 2 lakhs was allowed under section 24 clause B under the head income from house property. Why 2 lakhs, sir? Why 2 lakh? Because the loan is taken for SOP. The status of the property for this year is SOP. Property taken in 2017 for self-occupation, meaning that property is still self-occupied. So in this year, the status of the property is SOP. The loan is taken for this SOP. 35 lakhs. So that interest, 3,85,000, this interest is for that SOP. SOP interest will be allowed in this year, no? Why are you claiming this under 24B, you know? Why are you claiming this 2 lakh? Because 115 BAC is not followed as given in the question. Please check. Option of shifting out. If they would have told you, no, that he is not shifting out, then for this SOP, whatever interest you are claiming right now, no, will not be allowed. Excess interest under 80EE also will not be allowed. No interest will be allowed. Because both the deductions under 115 BAC, default tax regime, not available. But since you are not following 115 BAC, you can claim SOP interest under house property also, and the excess interest which you could not claim, you can claim under 80EE also. Why 80EE? Because all the conditions of 80EE are fulfilled. That I am going to tell you. Wait. So tell me, 2 lakh, up to 2 lakh you will claim under house property? Yes or no? Now, excess 1,85,000 allowed under section 80EE. Why allowed under 80EE? Wait. Loan is sanctioned between 1st April 2016 to 31st March 2017. Loan sanction date you are supposed to take 28th March. Okay. Loan amount is 35 lakhs, not more than 35 lakhs. It is 35. By taking this loan, you have purchased a property. Value of the property is also 50 lakh or less. And as on the date of sanction of loan, nothing is mentioned. That means you are not owning a any other house property, you are not having any residential house property as on the date of sanction of loan. So all the conditions of 80EE are fulfilled. And if all the conditions of 80EE are fulfilled, hence the excess interest 185 you can claim under 80EE, but subject to maximum how much? Subject to maximum 50,000. So this 1,85,000 will be allowed under 80EE. What has happened to this? Allowed under 80EE. But how much? 1,85,000 or 50,000, whichever is lower, meaning 50,000 you can claim here also. So this 50, this 2 lakhs. Therefore, eligible deduction in respect of interest on housing loan 2 lakh plus 50,000, 2,50,000. 385. Understood now where you are going wrong? Okay. So please don't commit such kind of errors. You have to do it like this. Okay. Now ICI question 12 is done. See, 2 lakh here, 50,000 here, done. Okay. Now coming to 80EA is done. 80EB is also done. EAEB, yes, this illustration, good example, good illustration, important. Sir, no. This one. Visible, no? Okay. Following are the particulars relating to Mr. A, B, C and D who are salaried individuals. Okay, no problem. How much amount Mr. A, B, C and D are taking as loan? Okay, no. So first they are saying that Mr. A has taken 43 lakh rupees of loan. Very good, Mr. A. Oh, loan you have taken from HFC. HFC means Housing Finance Corporation, Housing Finance Company. Very good, When the loan was taken? 1st April 2021. Meaning 1920, 2021, 21, 22. These 3 previous years. Loan taken between 1st April 2019 to 31st March 2022. 1st April 19 to 31st March 2022. 1920, 2021, 21, 22. Ends on 31st March 2022. Okay, no? So, loan is qualifying under 80EE or not? 80EE. This is not the loan taken in 16-17. This is loan taken in 1920, 2021 and 21-22. Any of these years. Yes or no? So loan is you will always see the date of sanction. Date of disbursement is irrelevant for us. When the loan was given to you, when you came to take the loan, when the loan was disbursed, we are not worried about that. Always check the date of sanction. Okay, no? So when the date is sanctioned, this date. Loan is taken from Housing Finance Corporation. And see, there is no limit on the amount that how much loan you should take under 80EEA. Yes or no? So 43 lakhs is okay. Now, the loan was taken for purchase of a residential house property for self-occupation. Meaning for my SOP, I am taking the loan. Okay. Stamp duty value of the property is not more than 45 lakhs. Very good. So residential loan, stamp duty value is not more than 45. What is the rate of interest? 9%. So on that entire 43 lakh, if I apply 9%, the interest will be 3,87,000. Out of this 3,87,000, I would have claimed 2 lakh under 24 clause B. So reduce 2 lakh. 1,87,000 will remain. Can I claim that excess 1,87,000 under 80EEA subject to 1,50,000? Yes, because all the conditions of 80EEA are fulfilled. Please check. 2 lakh, Mr. A he will claim 2 lakh under the head house property. Yes or no? And under chapter 6A, he is going to claim 187 subject to maximum 1 lakh 50. Yes or no? So out of 387, 3 lakh 50 will be allowed to him. Done? This is Mr. A. Over. Coming to Mr. B. Now see, B is taking a loan. Check the date of loan. Date of sanction, 1st April 2020. Meaning, his loan can be qualifying under 80 EEA. Sir, loan has to be taken from any bank or housing finance company. You have taken a loan from. This is the reason why 80 EEA excess interest cannot be claimed there. If you want to claim the excess interest on this loan under 80 EEA, the loan must be taken from any bank or any housing finance company. You have taken the loan from NBFC. Getting my point? Loan is taken for acquisition of residential house property. For what? Self-occupation. This is okay. Loan is sanctioned also okay. Amount of loan is also okay. But see, stamp duty value is also more than 45 lakhs. Two reasons are there. Because of these two reasons, 80 EEA cannot come. So now 9% per annum interest will be paid on how much? 45 lakhs. So on 45 lakhs, 9% interest will be paid. 4 lakh 5,000. Entire 4 lakh 5,000 cannot be claimed under 24B. So under the head house property, you are going to claim 2 lakh. But extra 2 lakh 5,000 will now not be allowed under 80 EEA because 80 EEA cannot be taken. Loan is taken from deposit taking NBFC. Amount of stamp duty value, stamp duty value of the property is also more than 45 lakhs. Yes or no? So that extra 2 lakh 5,000 will be ignored. Will not be allowed under 80 EEA. Yes or no? Only 2 lakh out of 4 lakh 5,000 will be allowed. Yes or no? Pay attention. Income from house property, out of 4 lakh 5,000 you can claim 2 lakh, and under chapter 6A 80 EEA not permissible. See the reasons. The same two reasons we have also identified. Hence that excess interest of 2 lakh 5,000 cannot be claimed under 80 EEA. Got it, sir? Easy, no? Made easy. Say thank you. Okay. See, now the loan is 20 lakhs, deposit taking NBFC. Okay. Now the loan is taken for purchase of EV, electric vehicle, for personal use. So even if you are taking it for personal use, then also okay. Now this loan must be taken between 1920, 2021, 2122 and 2223. 4 years are given. Loan sanctioned 1st April 20. Very good. Amount of loan immaterial. Value of the property, value of the electric vehicle immaterial. I don't want to see that how much was the cost of the vehicle. Yes or no? Now date of sanction, and the loan must be taken from any bank or specified NBFC. The specified NBFC, yes, correct. So this is also correct. All the conditions of 80 EEB are fulfilled. Now on that 20 lakh rupees of loan, you are going to pay 10% per annum, meaning 2 lakh rupees. That entire 2 lakh you have not claimed as a deduction under any other provisions of the Income Tax Act. Hence that 2 lakh will be allowed under 80 EEB subject to maximum 1 lakh 50,000. Getting my point? Now coming to Mr. D. Mr. D is taking a loan for, he is also taking the loan for purchase of electric vehicle for personal use. Wow. How much loan he is taking? 15 lakhs. Very good. No problem. Public sector bank, no problem. You can take the loan for electric vehicle from a public bank also. But the loan was sanctioned 2 days prior to 1st April 2019. He should have got the loan sanctioned on 1st April 19 or afterwards. But since the loan was sanctioned prior to 1st April 19, no. Hence on this loan, whatever interest you will pay 1 lakh 50 cannot qualify for a deduction under ATEB. Nil deduction under ATEB. Please check. Not permissible since loan was sanctioned before 1st April 19. Got it, sir? Now see, these kind of simple adjustments can come in your main question. And in your main question, they are not going to tell you, please consider ATEE also. Please consider ATEEA. Don't forget to take the deduction under ATEEB. They are not going to tell you. You have to remember, oh, all the conditions of ATEEA are fulfilled. I am calculating house property income. Under the head house property, I am claiming 2 lakh. So the excess interest, oh my god, this much excess interest, ATEEA is applicable. I should not forget to claim this under ATEEA. That thing should be coming in your mind. Examination question paper question will not tell you take the deduction under ATEEA. Hidden adjustments are there, no? In accounts, these are hidden adjustments. Hidden here, no? So take it out from in the exam. Don't keep them hidden. Getting my point? Okay. Now, all the questions, relevant questions we have done so far. Okay, no? Now, see. Now, ATEB is done. Perfect. ATEB is done. Now, G series is starting. Okay. So, we are starting from here in tomorrow's lecture. In tomorrow's lecture, we'll start from here and we'll finish all the deductions. We are going to start the main questions also tomorrow, which we are, 15 marks question, which will be coming in the exam, which we are going to start tomorrow itself. Okay. Today you study whatever we have done. Okay. And tomorrow we are going to continue from here. Oh yeah.